Good morning, everybody, and welcome to the Gulf Intelligence Daily Energy Markets webinar, where every day we take a brief time out to review the movements in the Asian markets and how they might instruct us for later in the Middle East and European day. Let's kick off with our regular Monday morning anchor, Omar Najia, Global Head of Derivatives at BB Energy. Omar, good morning and welcome back to the table.
We've seen Sean.
A bit of a bounce back as the markets opened in Asia this morning, 2% or something like that. What's your takeaway from this crazy weekend we're all coming out of and where the markets are traveling at the moment?
So view is basically unchanged. We saw a sell-off last week and we're seeing a rebound early in the week. Crude's up about 80 cents, trying to get over 38. But I think the bottom line is for crude that the path of least resistance is down. So today you've had OPEC say that, they believe that we're heading to 50 or higher and everything is fine. And we've also had the news that, Trump might be released from hospital, which is, always a good thing. So I think, markets
I figure if they don't release him, he'll jump out the window. It's kind of like,
yeah, but I think
I will run away.
I think what it's showing us is, the COVID thing is interesting, but I think it's, how can I put it? I don't think that, I think with him being released, it'll put like some minds at ease because people usually focus on, big political figures, just like Boris Johnson. So, it's starting off the week in a positive mood, but I think, gravity comes along. I'm looking for my targets lower still, 31 and 3,000, let's call it on the S&P. So no change in view.
Okay, Kevin Wright, good morning, head of Asia for Kpler. Kevin, your thoughts this morning? Demand signals remain still somewhat weak, although there's still a view that China can pull us all forward. What's your analysis this Monday morning?
Good morning, Sean. I think Omar's point is absolutely spot on. Actually, that we've seen a bit of a recovery, 2% or so this morning on the back of the news of the president's recovery or the seeming recovery. Is demand changed anything from where we were last week? I don't really think so. On your actual news digest today, I read about the bullet trains, the Shinkansen in Japan, suffering from just basically zero demand. And I think, or not zero, but 50% lower demand. And I think that's pretty much the case globally. We're seeing, yes, some signs in China, but is there enough there to support the whole world? Really, no. I know this week is Golden Week in China, and obviously there's a huge amount of migration that goes on during this period. But
600 million people apparently on the move in China this week.
Yeah, I always love these stats. It's the second largest migratory event in the world every year, only beaten by Chinese New Year travel. But as we know, China on its own is not enough to support the whole world's demand. India, interestingly, has seen gasoline demand starting to recover. It's actually back to pre-COVID levels, which is a healthy sign for the market. Obviously, the Indian population is very large, and you've got a lot of what they call two-wheelers or motorbikes consuming gasoline. So that's potentially, one of the first signs of demand recovery that we've seen. Everywhere else, we're starting to see more serious lockdowns being mooted around the world, and therefore the impact on demand. But if India and China are starting to come back, then that's obviously significant for the markets.
Let's welcome to our table Dan Graeber, the author of the Germ Report. Dan, welcome to the table for the first time, joining us from Middle America, I believe Detroit. Dan, your takeaway, and you obviously had a closer sense to the ground there, of all things America, and where America wakes up this Monday morning looking at this massive election and what its outlook might be for all things stimulus package 2.0 and other such things. How do you see the world this morning?
I I think that, the general consensus is on par. I'm looking at Brent this morning. It's down 1.8%, or it's up 1.8% as we're speaking now. I think a lot of that might be dip buying from last week. Some of the traders that I were talking with last week were kind of looking for that floor during the Friday sell-off. In terms of an assessment on Trump's health, I think that the United States is going to wake up and see the news that it wants to see. If you're in the Trump camp, you're going to see his signs of recovery, and you're going to see him, triumphant once again in pure Trump fashion. He's on oxygen on Friday and he recovers magically on Monday. But then again, some of the, take your pick on what analysis you want to see coming out of the press in terms of his health. I mean, the man is still COVID positive. There were comments yesterday in the press that, he goes on this grand tour of his supporters at Walter Reed. How many people does he have to put at risk to make that political statement? So I think it all depends on what side of the spectrum you are in the United States. In terms of the general outlook, I'll agree with the panel. Last week we saw layoffs from Marathon, we saw layoffs from Equinor. It just doesn't look like there's going to be any magic thing coming down the pipe that's going to tell us we're safe at above $50 per barrel. Looking later this week, I'm wondering what OPEC's going to say in their world outlook later this week to get a kind of a broader consensus view.
Trying to get a direct market connection between Trump is sick and now he's better, or he's, I don't know, still sick. But nonetheless, Dan, a little bit more optimism lifting the oil price this morning. But I don't see where that connection is vis-a-vis if Trump recovers, then maybe he's a reborn COVID convert. I mean, certainly a lot of his spokespersons are talking the COVID language, and that might be negative for demand and might be more aligned with economic closures, et cetera. So I'm wondering, where would you kind of put a connectivity point, if you could, between Trump's health and the health of the oil markets or the markets in general?
Well, I think if you look at, the United States, I remember, several years ago when I was in graduate school speaking with the BBC, it's like, what's the, over focus on the United States? It's like, well, you're United States, you're a transparent economy, et cetera, et cetera. So I think that, the markets are a lot about mood, and to paint a situation where the president is seemingly overcoming, COVID-19 at a brisk pace speaks for, stimulates that mood in the market. I mean, we can explain a 2% jump on Brent this morning on Trump's health just as easily as we can peg the 4% drop on Friday to Trump's health. I mean, I think there's a big concern. There's a lot of uncertainty in the United States, particularly heading into the elections. So I think that the uncertainty in the political mood leads to uncertainty in the markets, and we're seeing that today.
Omar, same question really to you. I mean, obviously where this plays out, there's some talk that if Trump comes back to work, then it might increase the possibility that they finally get this second stimulus package approved. Where do you draw the connection between this current sort of political cycle and where the direction that the markets may move?
Well, I think basically the most important point, or the one that I wanted to make, was the connection between the markets and what Dan was saying, which is magic. So right now, we have like this magical thinking that's going on in the biggest market in the world, which is the US, right? So just to give you an idea, apart from Trump making magical recoveries and all this kind of magical tweets and all the rest of it, we also have the S&P, which is trading at trading price to earnings ratio of about 27.2, which is about twice its historical average of 16. Okay, and nobody seems to, nobody seems to kind of, mind or take that into account. And you have the markets being something around 175% of GDP, which means that even at the peak, way back in whenever it was, when you had that NASDAQ bubble, it was basically at about 145% of GDP in, I think, 2000. So the problem right now is everybody seems to believe in this kind of, la la land where we don't have to think too much, we don't have to do too much. The Fed will, you see stimulus, you buy, you see Fed, you buy.
But just Trump. On that point, Omar, if you take the debt burden of a publicly traded company at X, whatever X is, the debt burden, the price of that debt burden now is half or a quarter of what it was a year or two ago. So the ability of that company to generate more profit because it's putting less money towards debt gives it a higher multiple. No, I mean, that's some of the logic.
Well, let me kind of try and explain. So business debt today is about 83% of GDP. Back when you had, again, the tech bubble, year 2000, it was about 60%. Government debt in the US was about 40% of GDP back in 2000. It's now way over, or close to above 100%.
100%.
Whether it comes in 115, whatever, I don't know, but above 100% easily. The other thing is that you've had, since 2008, you've basically had zero interest rates. Sometimes it went up to 0.5, sometimes it went down to 0.25, but it's been 0%. So the problem is that this debt that we've had and that's accrued hasn't led to more demand. What we've had to do now is go back to zero. Some places are negative, like Japan and maybe Europe at some point will go negative. So you're not getting, once you have a certain level of debt, putting more and more and more doesn't get you the same fillip to markets or to demand or to growth or to any of that basically, happens when you have zero debt and you start to increase it. So that's the issue. And the issue is now we're basically just on a, when they say everything is on the table, they have nothing on the table. It's basically, monetized debt. So at the end of the day,
let's keep it a little bit in the imminent sense of fiscal. But Kevin, back to the basics of where the oil markets are. We see the Norway oil strike, 8% of output coming off. Possibly that strike looks like it's growing rather than reducing. So that's a number of barrels off the market. Meanwhile, Libya back adding barrels. It now seems at a fairly reliable level, 200,000-300,000. What's your sense of where the fundamentals are vis-a-vis some of these supply issues?
Well, I think it's clear that there's no shortage of supply overall. I mean, we've seen surpluses growing around the world for the last several months. The demand hasn't been there to digest the crude that's been stored. So Equinor takes 330,000 barrels a day off the market. Libya comes back and effectively almost balances it out. So the impact overall there is a net, not a lot. But the simple fact is, that inventories are very, very high. Chinese inventories, 960 million barrels in tank across the strategic, commercial, and refining stock. So there's really no shortage of supply.
Do you expect, obviously we're getting into the window of time in which OPEC has to start thinking about its next steps with the JMMC meeting next week, at the end of next week. What do you think the noises should be around that?
Yeah, it's a very interesting one, and we've made this point before that OPEC now takes this so seriously that the JMMC meetings are happening every month rather than every 6 months or 12 months as we've seen in the past. OPEC is doing a relatively good job of managing compliance with the cuts and so on. And I think they will carry on doing a good job of monitoring. I mean, the last people that OPEC want to ouch like hell are themselves.
Well, we're feeling a little bit ouch here at the moment with fiscal deficits ballooning in the Middle East. Dan, question that we touched on a little earlier, which has been the sort of will they, won't they, and with it the markets moving up and down over the last week or so. Will they, won't they agree a stimulus 2.0 at the Congress in the coming week or weeks? What are your thoughts on that? Obviously, the end of last week, the House passed the 2.2 trillion, more symbolic because they got no deal from the Republicans. But where do you think the road of traffic is on that?
I just don't. I see it. I see it's not moving at all. I get. I mean, I'm reading the headlines here. Pelosi's still talking about the stimulus effort, but we have to inject the political calculus into that negotiation with less than a month to go before the U.S. election. Omar's speaking of this Trump magic wand. So I wonder, is it in the Democrats' best interest to actually see a stimulus package come through, because then Trump's obviously, and the GOP is going to hijack that narrative and say, look at how well we've done for the U.S. economy. Everybody's getting their $1,200 U.S. dollars in stimulus checks, and the economy's doing fine. Look at the S&P, et cetera, et cetera. So I don't know if it's in anyone's best interest to actually do anything. And considering we're this close to election, I think that more U.S. lawmakers may be concerned on leading the party narrative than actually doing any real leadership this close to November. Will we see something in the lame duck session after the elections? That's possible, but I don't know if we're going to see something this close.
Yeah, I suppose that we have the Senate now out till the 12th of October, I think, and They will then return with a complete and utter obsession of approving the Supreme Court judge.
Exactly.
So unlikely to get into a big fight around a stimulus package, it would seem. Omar, where are we looking at these days vis-a-vis the dollar? A lot of expectation of dollar weakness in the fourth quarter. Where do you see the trend line on that and its impact for the energy markets?
No, I think basically on the dollar index, it started its rally, let's call it at 91.50, so 91.5%. So it started its rally there. And I think if it can hold like 93.30, 93.40, something like that, then I think it easily gets over 97, then 100, then 103. So the point is, there is a misunderstanding to do with printing dollars and dollar weakness. So it's not like you have a flood of dollars. It's more like you have a flood of debt. So take that to one side. So what a lot of people have done when they see these headlines, they go and they buy the euro against the dollar, they buy GBP against the dollar, they buy gold against the dollar, silver against the dollar, whatever it is. So I think the dollar short trade is a massive trade, and it's a very, very crowded trade. So at some point, these trades will have to be quote unquote unwind. I'm not saying that we can't get another high, let's say in the euro, if it gets about 118, gets to 120, and I'm not saying the GBP can't get back over 130, 131, but what I am saying is strategically, long-term, trend-wise, they're going to fall, and they're going to fall hard, and the same basically with gold. So the question is, when these people want to unwind their shorts against the dollar, they're going to all have to exit, and we've seen that already. We've bounced from about 91 to about 95, 96. And I think we'd retrace a little bit because we've made the initial move. We hold 93.50 and then up. Even if 93.50 gives way and we go below 91.50, then I think, again, that ends the decline and we see another robust move up to the dollar. So I'm actually bullish to the dollar, which makes me think, again, bearish equities, bearish oil until we see that correction, because the dollar is basically a safe haven play. So once I get bearish the dollar, then I think, okay, what are the implications, et cetera, et cetera.
Yeah, it's hard to see how those two things coexist. I suppose it's a time point, and that is the stronger dollar and the
correction. Correction in oil.
Oil price.
Correction in oil first, and then recovery later. So shorter term, for people to get long oil, you have to see a significant, in my opinion, you have to see a significant decline. $40, 37, 38 is not significant, doesn't make me salivate and think, you know what, I'm sticking a flag in the ground, I'm going to be long. But you get it to 31, you get it to 29, you get it to something like, $30, $31, you stick a flag in the ground and you say, right, I'm long.
And Kevin, to get anything like that kind of demand recovery, everybody looks to China and Asia. We've talked about that, but ultimately, where is the rest of Asia at this point in the sort of COVID cycle, if you like? China seems to have it under control, but not strong enough to recover the world. Where is the rest of the Asian economies?
Yeah. There's a bit of a spectrum. There's a bit of a variety or variance across the region. Some of the regimes some of the governments across the region were very quick to respond to the crisis, and we saw, an immediate impact on demand. But now we're starting to see a recovery in those countries. A good example being Vietnam of that kind of behaviour. But other countries within the region are still struggling. Indonesia, the largest economy in the region, still very much struggling with the pandemic. The Philippines still struggling. So it's really there is a lot of variance across the region, to be quite honest.
Where about the other big issue that seems to be not going away is the turbulence in the South China Sea, where some of these countries are starting to align. We have one of the stories in the digest today with Pompeo going to Tokyo today to sort of drive up this new alliance with Japan and India. Where is the geopolitics, do you think, playing at the moment vis-a-vis the region and the Southeast Asian states aligning contrary to China?
I think there's a realization, and there has been a realization for a number of years now, that the Chinese territorial claims are too aggressive or too extreme. And but the big change that's come about in the last week or so is Duterte. Now, Duterte was sort of flirting with China for the last couple of years and almost allowing a little bit of Chinese expansionism. And I think with his speech to the UN last week and his general sort of tone, he's starting to change his view. And I think, like you say, Pompeo going to Japan is not insignificant in terms of American influence within the region, I should say.
Let's go to the survey question. And again, it's all things Trump. And looking at this sort of point, what's the next output? Is Trump going to become a COVID reborn convert and sort of urge stricter compliance with COVID protocols? That's the question this morning. A reborn convert as well, perhaps. COVID for Trump as he comes out of hospital, as he is, as Omar said, released from the shackles of medical treatment. Dan, your thoughts on the sort of COVID picture in the US? We see in Europe a growing sort of, the dots are joining up. London, Madrid, north of England, France, Spain. The COVID sort of 2.0 wave is very identifiable. Politicians are reacting to it. What about in the US? I just picked up one story in the digest today, just for symbolic purposes. New York suburbs of New York City going into some form of lockdown. What does that picture look like to you? And is there political appetite to really get on top of the COVID through more stricter policies?
I don't know if there is an appetite. I was, before we started the conference, the city I live in is a relatively densely populated metropolitan area, but you go 20 miles outside the major city limits and it's farms and, apple orchards. And, you go to those communities and nobody's wearing a face mask. There's Donald Trump flags everywhere. There's no consequence for not wearing a face mask. Whether or not Trump's going to be this reborn convert, I doubt it. The doctors are, he is COVID positive. So why is he going out on this political tour late last night? I don't know if there is the appetite for any real gauntlet thrown down in the U.S. battle against COVID, because it's such a political element at this point. I think that people are believing what their party allegiance tells them to believe more than perhaps, their healthcare professionals. This is I remember analogies at the beginning of the pandemic said you need to treat this thing like glitter, and we all know how difficult glitter is to get off of everything. But then, you go to the markets and people have the face mask down to their nose, they're, down to their chin. I don't know that we're really going to get anything settled again, like I said, until after the election. So I think it's just going to, buckle in for the next, 28 days or so, and then we'll see what happens.
Omar, let's start to take a look a little bit as to where the rest of the week goes. Obviously, Monday morning, Asia trade, as we said, up a few percent, a little bit of a clawback of what was lost on Thursday. Where do you see the immediate sort of travel here, and what might impact this coming week? Another debate in the U.S. election on Wednesday.
For numbers, like if you look at the S&P, you could easily get to maybe 34, 50, maybe even 35, something like that. But I think the bottom line is we're correcting. I don't think the correction is over. So again, nothing travels in straight lines, but I think maybe you get a little bit of a pop higher, and then you see it basically fade towards the elections. And on oil, basically, I would sell it. I think oil is going to be in trouble, and I think that'll also drag down the S&P for the forwards. But again, I think basically the Trump thing is fascinating, because I am not a Trump fan, but I like the idea. I much prefer to have Trump in the White House than somebody like Biden. And I like the idea basically is that an incumbent US president has never lost an election if basically the markets are close or above the highs back in February. So it's going to be very interesting, because the market is telling me, the correction is telling me it's going to be off and Trump's going to lose. But I still think he wins. I mean, I like Trump because, in my opinion, he's showing the real face of America to the world. I mean, before it was all couched in this kind of Obama, smile to your face, stab you in your back, and all that kind of stuff, especially with a view to Europe and all the rest of it. Now it's like, Trump is, I am king, you are my vassal, you want to talk to me, kneel, that kind of stuff. And that kind of stuff, when you say that kind of stuff to the world and you say it openly, I think the world changes. And I think that's what you're seeing. You're seeing the world change, not because of, Trump, but because the mask that the US has had since 1945 is basically off. So you're seeing basically the real power structure, if you like. It reminds me of that movie, I don't know if anybody saw it, called They Live, where basically, aliens take over the world, but you can only see them if you wear like these special sunglasses. So I think everybody's worn these sunglasses and you see the real power structure. I think people...
Well, it has to be acknowledged, where you are on the political spectrum, that of the 250 million eligible voters in America, 120 or 130 million of them won't even vote because they don't care enough about the outcome. And then the other 120 will be fought over by the two parties. So it is apathy or disregard is a face of some description. Kevin, before we get dragged down that buttonhole, outlook for the rest of the week. Clearly, things in Asia not being the savior that we were hoping in the second half of the year, unlikely to change. If anything, get worse, perhaps.
Yeah, I think the week will be, well, certainly the start of the week will be a little bit quiet because of China being on a sort of nationwide public holiday. I don't really see a huge amount of change in terms of immediate demand recovery out here. So I think, we will probably bumble along where we are. I think
does the US election play a similar, Kevin, a similar outcome in Asia, where everything's sort of suspended until the outcome of that election takes place?
There are certainly a lot of people watching it. I mean, it's a global event. It's not really just limited to American interests, right? I mean, you talk about apathy, but actually it drives where the world goes, whether we like it or not. And so it has global attention. And it's that simple.
Absolutely. Let's go to the survey result before Dan gets the last word and see where the mood in the room is on the Trump. Will Trump become a COVID reborn convert and drive? No, 67% no. Dan, your sort of closing thoughts, a big week coming up, as every week seems to be in America now. Anything that you'll be watching particularly closely for some indicators?
I think that, it's just going to be one of those regular weeks. I think that, there's this Trump coronavirus thing is going to play out till Tuesday, and then the market's going to shift its focus to API numbers, EIA numbers on Wednesday. Thursday, I think, will be a big event to watch this. What does OPEC think about the state of play? And then everybody's on Friday is going to see where their positions are and see where it goes from there. I mean, I'm seeing a consensus, about in the upper 39 level to around 30. And we've been bouncing around these levels in crude, and on day to day, it looks volatile, but over a long term, it seems like we're stuck. And I still think we're going to be stuck for a while, but don't quote me.
Dan, thanks very much for staying up
for having me.
in Michigan. I think Kevin from Singapore, Omar from Dubai, everybody's insights really appreciated. The 50 odd people logging into the call, thank you so much. I think one thing I'll be watching this week, although it's not getting any attention, and although I think I might have mentioned it yesterday, is all of the other people who got COVID on the back of this outbreak last week. There's a number of people there, and whether Trump recovers or not, I think, where are these other people? What's Chris Christie's experience? If he suffers greatly, somebody who's heavy on diabetes, he's got some serious challenges, this story could explode in a different type of way. So I'd be watching the other dozen who aren't Trump and what their journey is through this COVID infection that they now face. Thank you very much, everybody. Have a safe day, economically productive week, and we'll catch you in the coming days. All the best.